Coinbase Corporate Ops. It says, Coinbase Inc., which owns and operates Coinbase Pro and Exchange, also trades its own corporate funds on Coinbase Pro and Exchange. And I just wanted to give you briefly the opportunity to clarify.
Thank you so much for the opportunity to clarify. There's a few things that we do in our business. So one is we do have a corporate investment portfolio that every month we make an investment of crypto and add to our balance sheet. We've not sold that. We don't trade it actively, but we do increase the investment on a monthly basis on pre-established investment protocols. We do buy those on our exchange.
Got it. Understood. Thank you very much. So to the heart of the matter. Crypto, as we know, is a growing industry. It's rising in market value from $500 billion last year to more than $3 trillion as of November of this year, 2021. There are a lot of advocates, proponents of the cryptocurrency industry that discuss the creation of new digital currencies, I should say, and building safer, more inclusive system outside of the traditional financial sector. But I kind of want to explore this assertion a little bit more. Mr. Allaire, a substantial portion of the buying and selling of cryptocurrencies is done with stable coins, correct?
A significant amount is traded with stablecoins, yes.
It's about 75%. Does that sound about right to you?
I don't have the data in front of me, but it does sound roughly correct.
And these stable coins are designed to be backed by certain reserve assets, whether they are primarily USD or safe, highly liquid cash substitutes. Essentially, a coin to be stable in value so that people can kind of use it in a larger world of crypto where other coins could perhaps be a little bit more volatile in their value.
I can certainly speak to the design of USDC. I can't really speak to others. Mm-hmm. So yes, USDC is designed as a payment instrument under electronic money law in the United States, and so it's cash and short duration U.S. government treasuries, which is the underlying instruments for the stored value.
In fact, your firm recently announced a transition to one-to-one backing in dollars of USD coin after it was found that only 60% of the coin was backed by cash or cash substitutes. So if the cryptocurrency industry, hypothetically, lost its ability to use stable coins as a bridge to trade in and out of dollars tomorrow, would that cause a significant shift? It seems as though it would not be able to work the way that it does currently, correct?
Well, I think a primary reason why stablecoins are so powerful is that they're a superior form of settlement. And so the existing banking system moves slowly. Funds take several days for them to move, and there are significant fees, and the access to that can be limited. Whereas blockchains operate continuously, and settlement happens at the speed of the internet. And so I think it is important that payments and settlement in these new forms of internet financial products and services can operate at the speed of the internet. And so I think it's essential, in fact.
I see. Thank you. And so lastly, what would you say to some of the folks who are listening to what some folks are saying, not just here on this panel, but in the larger world? So the folks that say, what do you say to the folks that say, basically, this doesn't seem like a new financial system per se, but really an extension or perhaps expansion of our present one?
Well, I would disagree with that. I think what I believe we're seeing is a new open infrastructure layer on the internet, a missing infrastructure layer of the internet that is designed around value exchange and economic coordination, that is rooted in immutable data, the ability to interact with counterparties in a very, very safe way that hasn't existed before on the internet. And really, many of the efficiencies that the internet brings in terms of moving information brought into moving value, but also with greater degrees of security than are often offered through the existing financial system. So I really do believe we're building a new global economic infrastructure layer, and we're certainly...
And you would say that that's not distinct. You would argue that that is distinct, not an expansion or an increase in the sophistication of our current financial system.
I believe, for this to take hold, it needs to be well integrated with our existing financial system, and we've long believed in a kind of hybrid model that does that.
Thank you very much.
Thank you. The gentlelady's time has expired. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair. I truly appreciate this hearing. This is a great hearing. I want to start with Mr. Brooks, and I'm going to attempt to respond to some of the objections, which I believe demonstrate a complete and utter misunderstanding of what we're even doing here today. One contention is that the vibe of crypto is a stick-it-to-the-man vibe, but in actuality, it's dominated and controlled by big tech and Wall Street. While the culture may be somewhat accurately described, the notion that a handful of big tech leaders and Wall Street banks somehow created and now control crypto is absurd on its face. And frankly, anyone who would make such a claim, I believe, should be ignored on this topic. My contention is that Web3, crypto, blockchain, et cetera, by its very structure, has the ability to solve some of the most difficult and frustrating problems that the current version of the internet and the financial system have, where a narrow set of platforms control what we see, how we interact, and what we buy, while millions of Americans remain completely disconnected from the financial system. Web3 can turn this entire thing on its head in a very empowering way. So my question's simple. How specifically could you see Web3 solving some of these bigger challenges associated with the current version of the internet and the financial system?
Well, Congressman Gonzalez, thanks for the question. When I go back to the criticisms that you were just recounting, the only part of that I heard was hip. I'm going with hip. The rest of it, we can come to. But in terms of the problems being solved, I think the first issue is the biggest critics of cryptocurrency have been the biggest banks. Those are the people who are the most concerned about the entry of stablecoins into the payment system, about the ability of crypto assets to build networks that are away from the clearinghouse. Those are the biggest critics, and so I think that tells you a lot of what you need to know. And the reason is because the way that Web3 solves a lot of problems, it's really twofold. First of all, it eliminates the toll collector role of traditional banks and traditional broker-dealers. The main thing that they do is they employ large numbers of human beings maintaining ledgers of account and allocating credit for a fee. Bitcoin and other cryptocurrencies do that without human beings and with no fee. And the elimination of minimum account balance fees, the $25 wire transfer fee that your bank charges to give you 3 days to send money abroad, those are gone.
Thank you.
That's what's so important. But the last part is it unlocks value that traditional economic structures don't unlock. The creator economy, play to earn in the gaming system, those don't exist.
So I want to go to Ms. Haas on that. Building off this, in your testimony, you mentioned use cases for Web3 in the creator and gaming economies. Could you please outline a specific use case and discuss how Web3 can empower creators and artists over mega tech platforms, which was implied earlier? And quickly, please, if you could.
All right, let's talk really quickly. I'll cite the one that we just talked about earlier, which is in the month of November, Play to Earn. So these are where video games, one can play a video game and earn NFTs. Those NFTs are in-game experiences. So if anyone here has young kids who are playing with Roblox, playing with Minecraft, playing with these, there's in-game experiences where you can buy avatars, you can buy various things. These can become NFTs. These NFTs then can be sold for value. And so what we're having here is these kind of the concept of a play to earn. You can play the video game, you can earn money, you can then monetize that back into fiat, and you can create these new economies and these new communities that have increasing value.
Thank you. Mr. Bankman-Fried, I believe you live in Hong Kong, is that correct?
Sorry, repeat that?
Do you live in Hong Kong, is that correct?
I do not anymore.
Oh, okay. Well, let me ask the question
I
differently.
did at one point.
So 10 years ago, certainly 20, 30 years ago, if you wanted to start a major internet company, you probably wanted to do it in the United States. You probably wanted to do it where you grew up, in Stanford on the coast in Silicon Valley, for a whole host of reasons, one of which being a very, very conducive, innovative environment. When I look at Web3, I see a lot of projects moving overseas. To what degree is the current regulatory environment in the United States contributing to this change where projects are now being built and domiciled in nations not the United States, whereas in the previous versions of the internet they were?
I do think it has contributed to that. I'm optimistic that we're going to see changes to the framework over the next few years that will bring us into a world that can make the United States the source of the deepest and most liquid markets in the cryptocurrency ecosystem. I don't think we've seen that historically, and if you look at the difference between the volume distribution of crypto and digital assets versus most other industries, you can see that.
Mr. Brooks, do you have any thoughts on that?
Well, Congressman, as I said earlier, there are certain activities that our G20 partners seem to think are perfectly appropriate, legitimate, and subject to regulation, and we keep resisting. Those have moved abroad.
Thank you, and thank you, Madam Chair. I yield back.
Thank you. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you so much for everyone that have been coming forward in regards to this important issue. Cryptocurrency like Bitcoin currently consumes enough energy to power a small nation, and that's something that continues to be missed in this debate around this issue. And the University of Cambridge analysis estimated that Bitcoin mining consumes 121 terawatts hours a year. To put that in perspective for everyone, that's more electricity than the entire country Argentina consumes. That's more than the consumption of Google, Apple, Facebook, and Microsoft combined. One Bitcoin transaction, a single purchase, sale, or transfer uses the same amount of electricity as the typical US household uses in more than a month. And so this is really outstanding to me, and many folks do not know this, many Americans and folks that are talking about this issue. And so, Ms. Dixon, can you explain why for cryptocurrency like Bitcoin that rely on proof of work model mining is such an energy intensive process?
Thank you for the question. This is a really important area, obviously, in terms of sustainability and the focus on what we do in this space. We should always be trying to do it better and much more efficiently. In Bitcoin is the proof of the way that Bitcoin consensus is achieved is through really complicated math equations. And so there's a lot of energy that's needed to be used to be able to make that happen. I know best about the consensus mechanism on Stellar, which is the Stellar Consensus Protocol, which can be done on a very small computer, any of the ones that you have in front of you. And we had a University of London did a study on the Stellar network itself, and the network is low in terms of energy consumption. It's around 0.00022 kilowatts per hour for each transaction. That's less than a transaction for Visa. So that's a really important comparison for us all to think about. So not every consensus mechanism is proof of work or proof of stake. Again, there are many, many different ones out there, and depending on the mechanism, it depends on the energy consumption. But it's definitely important for us to be able to try to do this better, more efficiently, and to consider the sustainability concerns around it.
No, I'm so glad you talked about a model that potentially, to shrink cryptocurrency's enormous carbon footprint. I'm particularly alarmed that previously, idled, shut down coal plants like the one operated by Greenwich Generation in Seneca Falls, New York, are now being brought back online to aid in cryptocurrency mining. And I don't know if the chairwoman knows this, but like in Montana, a coal-fired generating station is now providing 100% of its energy to Marathon Digital Holdings for Bitcoin mining under the power purchase agreement. Prior to the crackdown in China, it was estimated that nearly 2/3 of all Bitcoin mining took place in China, included in regions with very heavy power generation, such as Mongolia and other areas. But Ms. Dixon, should the world's central banks and governments be taking a more active role in monitoring and regulating cryptocurrency in order to bring energy consumption and carbon emissions in line with our own targets here in our country at the Paris Agreement? What would that look like?
I think it's really important for us as an industry to really focus on this issue, even without regulation. I think it's something that you need to always balance the value of what you receive in terms of the harm that's actually created to the environment. So we constantly have to be doing that kind of analysis. I think that we all need to focus on minimizing the energy consumption as much as possible, and then think about how we can work with governments to be able to consider the best way to achieve that kind of the carbon neutral status that I think a lot of folks want us to get to. So I encourage constant discussion. I encourage us to be innovative. This is one of the wonderful things about blockchain and just innovation generally. You look and you use technology to help to solve problems just like this.
Yeah, and the proof of work model fundamentally is incompatible with the environmental neutral future. And so, what tools, you're saying we got to move in this direction, Ms. Dixon. What tools can policymakers like ourselves look at to incentivize, to move us towards away from that model? How can policymakers accelerate that transition away from carbon intensive mining? We know our planet is burning. The climate crisis is here. And I just want to get the cryptocurrency community to become part of the solution and not make this crisis even worse. So can you talk about things that you would suggest for us to be working on in regards to this issue?
I think it's really important. We've actually engaged a third party to be able to look at the additional energy consumption, not just for what as I mentioned, the University of London did with respect to the work that they did, but I do think it's important to be able, and we're engaging a third party to look at all of the different transactions and how the network actually can even be better and better with this with respect to Stellar. I think that same kind of work can be done with all of the different types of consensus mechanisms out there. So I think research and more focus on what we can do to achieve sustainability and our sustainability goals is an important mechanism, and I think it would be really good to continue that conversation with you.
Thank you, and I yield.
Thank you very much. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thanks to Ranking Member McHenry for holding this hearing, and thanks to our witnesses for hanging in with us for such a long period of time. Your testimony and participation today is very important to helping us understand this area and craft the appropriate policies going forward. Mr. Bankman-Fried, FTX and FTX US have grown substantially over the past several years. Could you tell us about the economic impact from your perspective that FTX US has in this country?
Yeah, thank you for the question, Congressman. In addition to obviously the impact in terms of the hiring that we're doing and the support of a number of initiatives in the country related to job training and education, we're also hoping that we can help provide financial services to people who have not had easy access to those before. If you think about the number of intermediaries that are involved in a traditional financial transaction, whether it's using a bank or whether it's investing your assets, that's a lot of points that can be very difficult to navigate for a number of people, both in this country and in the world. We aim to be able to provide services to everyone here, all easy to access on a mobile phone, giving inclusive and equitable access to financial markets that have been missing to a number of people.
So obviously, you describe a great many benefits to the U.S. economy. So in your view, how do we keep this innovation happening in the United States?
So I think I'm optimistic that, on the regulatory side, we're not that far from that point. And I think that there are a few clarifications that could go a very long way here. I think that on the market side, having a framework with a single regulatory structure, and it might have multiple regulators involved in it. The CFTC and SEC are both likely to be involved to some extent, but having a single unified framework for futures and spot digital assets could go a long way towards providing the sort of experience that you can offer in a lot of jurisdictions today. I think that giving clarity on the stablecoin side of audit requirements for the reserves, but without sort of squashing innovation by requiring only a very limited number of institutions to be able to issue them, could go a long way on that side. And then the last thing I would say is moving away, hopefully, from a binary distinction of what asset class you are a part of, where one is very much close to a death sentence, and moving towards a structure where we identify the necessary disclosures for certain digital assets related to the issuance, related to the supply, related to anti-fraud measures, so that they can all be part of our financial ecosystem with appropriate disclosures and anti-fraud mechanisms and regulatory oversight would be really valuable.
So I want to turn to you. Thank you for a moment, Mr. Brooks. If you were king for a day and you were going to tell us, here's what you need to do to structure the regulatory framework, in a minute and 39 seconds, tell us what that would look like.
I mean, I can barely introduce myself in a minute and 39 seconds, Congressman. I come back to the concept of parity. I don't know why we believe that incumbent institutions are risk-free and anything new is highly risky. So if I have a platform built on a blockchain that is doing lending, I don't know why it's so hard for us to say that can participate in our banking system. If I decide that XRP is a security, why won't we let it list on a US exchange? The problem is we treat crypto assets differently from all other assets. And the answer is just recognize them for what they are. These are assets that represent some underlying activity. It could be a network, it could be an application. They have a value that people are willing to buy and sell at. Let them in. That would be my message. Let them in.
Okay. And I'm going to ask this question and then ask you all to respond after today. I recently read an article entitled "The Bitcoin Boom and the Quantum Threat." I bet most of you have read this article by Arthur Herman, who is a senior fellow at the Hudson Institute. The article discussed the fact that quantum computing could pose a security risk to the blockchain technology. My friend, Mr. Perlmutter, earlier asked Mr. Bankman-Fried about this topic, but I think it's worth revisiting. And I would open this question up to all of you and ask you to respond in writing. Do any of you worry that in the future quantum computing could be used to compromise the security of blockchain technology? And I see my time's expiring, and I'll just go ahead and yield back, Madam Chairwoman. Thank you.
Thank you very much. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
I thank the chairwoman, and I thank all of you for being here today and testifying before us. I want to start in a general way, and I'm thinking, Mr. Brooks, of what you said about the practice of law. With the advent of emails, I was a younger lawyer then and remember all the fears around it. And so, as has been said, and this is really a follow-up to what Mr. Green asked long ago, hours ago, it's obviously clearly a fast-growing and a bit mysterious market. Looking at the total cryptocurrency market cap over the last year, as some here have reported, it exploded from about $500 billion a year ago to now almost $3 trillion as of last month. But it's also clearly a volatile, fast-moving market. As of last night, the total market cap is back down closer to $2.4 trillion. Another example of volatility in Bitcoin, which lost half of its value over just 2 days in March before rebounding. So to that notion, to the people who find all of this a bit mysterious, are we at risk? Do we see warning signs of a bubble in this marketplace, if I'm allowed to call it that? What do we do to make sure that the industry does not threaten the overall stability of our financial system? Maybe, Mr. Brooks, I'll start with you.
Thank you, Congresswoman. It's good to see you again. I'll just give you a very quick anecdote. When I was practicing law, I represented one of the largest mutual fund complexes in the United States, and in their market room, they had a chart, a physical chart showing the U.S. equity market from 1792 to the present. What I remember about this room is it was a full city block long, and if you stood at the end of the room and looked at that chart, it was a straight line up and to the right. But if you walked right up close to the chart, you could very clearly see the Civil War and the Panic of 1907 and the Great Depression and all kinds of other volatility along the way. What I would tell you is, in the beginning of a fundamental technological revolution like this, the early days are going to see turbulence, but the long chart of crypto in only its 11-year history is up and to the right, just like the U.S. equity market. So what I would say is, there are risks, there's disclosures that ought to be had, there's framework regulation should be adopted, but the fact that the price goes up and down doesn't make it any different from U.S. equity markets in the first 100 years of the country's existence.
Well, that's a great comparison and probably a metaphor for other things that we are struggling with in our democracy. Hopefully, the upward trend is the trend. Let's pray that that is so. A little more specifically, all digital assets clearly don't fit into our current fiscal regulatory frameworks. And so we're here to try to learn what are the right policies to make sure that this is appropriately regulated. Do we need to start from scratch and create an entirely new framework for crypto with a new regulator, such has been suggested by Coinbase? Ms. Haas, can you talk about Coinbase's view that Congress should regulate digital assets under a new framework with a single regulator?
Thank you for the opportunity to clarify. So yes, we do believe that there's benefits to having a single regulator that can address the broad strokes of crypto generally. I share a lot of the views that Mr. Bankman-Fried had in his written testimony. I also share the views of Mr. Brooks, where we say, if it is a security token, then it is going to fall under the SEC. If it is a commodity token, then it will fall under the CFTC. But we have also new tokens here. And when you think about NFTs in an NFT marketplace, when you think about Bitcoin itself, when you think about these new protocols where all you're doing is getting a right to governance in a protocol, they do not fit under the contours of existing frameworks and neat definitions. So I think that we benefit from definition taxonomy. I think we benefit from clarity on who we go to kind of walk through these issues and find one voice. And we think we benefit from an SRO that can really get into the weeds of these issues and help us move with speed, in the regulatory speed, to keep up with the pace of the innovation of the industry.
Thank you very much. I appreciate that. Mr. Casarillo, you also said in your testimony that, quote, a primary prudential state or federal regulator should regulate both digital asset companies and their products. Could you elaborate?
Yes, thank you. Paxos was the first company in the entire country to become regulated. We operate using a trust company status, and the reason we do that is because we don't make loans and take deposits, so a trust company is actually safer than a bank. And so that's an example of using a state regulatory authority in order to oversee our business. And I think having either a primary regulator that's on the state basis or on a federal basis is what will allow there to be a consistent application of AML KYC rules, reserve rules, customer protection rules. And so there isn't a clear way to be able to do that right now. We feel this even ourselves as a trust company, where we don't have explicit reciprocity on a state-by-state basis. I think being able to create a clear parity across the board, as Mr. Brooks was saying, is very important for the industry.
I thank you, and my time has expired. I yield back.
Thank you. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you very much, Madam Chairwoman. As you may know, I serve as the ranking member on the Select Committee on the Economy, along with Chairman Himes, both of us also members of this committee. And we're holding the first of 2 roundtables tomorrow on financial inclusion and access to banking for underserved communities, a topic we talk a lot about also in this committee, and an issue front of mind for many underserved communities around the United States. And so, Mr. Brooks, I'd love to get your thoughts on the relevance of today's topic for financial inclusion and how the growth in digital assets and decentralized finance can actually drive inclusion, and can underserved communities benefit from these developments?
I love that question, and thank you for giving me a chance to address it. Couple of things. So first of all, let's ask, why do we have so many underbanked people in the United States? And the answer is a combination of minimum balance fees, monthly account maintenance fees, and all kinds of other things that are a hallmark of the money center model that banking is built on, right? If you talk to Mr. Allaire about his product, he would tell you they don't have any minimum balance fees. They don't have any monthly maintenance fees. You can keep your assets in a tokenized bank deposit for free. So that's the first answer, is there are no $10 a month fees. There are no $25 wire charges. Those things don't exist that eat away at your life savings, A. And B, the next most important thing about crypto is, here you have an early stage asset, which, unlike the IPO boom, unlike venture capital, doesn't require that you know a guy, or that you be well connected, or that you be an accredited investor to participate. This is a chance for underrepresented communities to be in on the wealth creation stage of some new thing, as opposed to coming in at the end. And so what I always say is, that's the way you solve underrepresentation, is through wealth creation. This is an opportunity, and that is why there are more minority investors than white investors in crypto in the United States, is because
I appreciate your comments, because I think in general, technology is one of the key aspects that we have to really address some of the underserved communities in the United States, and agree with your comments. You may enjoy our hearing tomorrow on the Select Committee on the Economy. To build further, what do you see as the main regulatory impediments to further innovation in this space, if we think it's really going to help us on the inclusionary aspect?
It's all incumbency protection. The big banks don't like this. The big banks have been slow to adopt because they make a lot of money on those fees I just mentioned.
Okay, so let me keep going with you if I can, Mr. Brooks, in the time that we have. In your opening testimony, you talked about the do no harm approach, and that approach helped bring in a period of tremendous growth and opportunity in really Web 1. You mentioned that some of the countries that U.S. crypto businesses are moving to. What are some of the examples of the positive approaches to digital asset regulation that you see in those countries? You had to put your finger on it.
Well, for example, responding to market demand. If a whole bunch of customers want to buy a Bitcoin ETF, why is it our business to say they can't do it, right? I mean, you see this domestically, New York versus the rest of the United States. Lots of investors like to buy certain tokens. New York won't let New Yorkers buy tokens. So they're safe in Nebraska, not safe in New York. Why would that be?
Thank you very much. I want to shift gears to you, Ms. Haas, if I can. I want to ask you about your firm's interactions with the SEC. As you know, the SEC blocked Coinbase from launching its Lend product earlier this year. Your CEO, Brian Armstrong, has been very vocal about his concerns with the SEC's decision and the process by which it reached that decision. I think it's important that regulators apply standards consistently. And so I want to better understand how this played out to the extent you can help us here. Has Coinbase had further conversations with the SEC about why it was not allowed to offer the LEND product?
We have, and we still do not have clarity as to why our product was not able to proceed.
And so how would you characterize the discussions you have had with the SEC? Is a little bit of a black box? I don't want to put words in
At
your
this
mouth. I'd be
time
looking
that
for
we
your-
have provided a lot of information, but not had clarity as to why or why not we can offer a product.
Okay, that's helpful. I think it's something that this committee needs to consider and look into as to how we assist technology being developed here in the United States rather than abroad, and appreciate your comments there. If I can, in my final 1 minute, Mr. Cascarilla, earlier in today's hearing, you talked about how people around the world want stability of U.S. dollars. We all know of countries with out-of-control inflation and autocratic governments. Can you talk just briefly about how digital assets and Web3 will help people dealing with these challenges?
Yeah, well, I think it's really important to recognize that in the U.S. we have a sophisticated financial system. It certainly can be better, but it's sophisticated and relatively stable, certainly compared to most places in the world. And when you look at the developing world, it's access to financial services that is a real problem. And I think in significant ways, they want access to U.S. dollars, but they also want access to crypto. They want to have the ability to protect themselves when they're in either politically unstable environments or economically unstable environments, or both. And this technology creates the capacity to create a global, interconnected way of being able to operate on an economic basis that hasn't existed before. And that's very powerful. The U.S. should take advantage of it.
Thank you very much, Mr. Cascarilla. Appreciate all of our witnesses here today. Madam Chair, I yield back.
Thank you. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you so much for this hearing on such a fascinating and critical topic. Blockchain technology has the potential to change how we transact around the world, not just in the financial sector, but across multiple industries. Indeed, digital assets have expanded the financial marketplace in unprecedented ways already. The Bank for International Settlements recently found that decentralized finance has grown to an estimated $250 billion worldwide. I want to zero in on one part of these transactions that's already been talked about a little bit, but I want to build on it, and that's the cross-border transactions. Ms. Dixon, your company is a nonprofit clearing network designed to facilitate financial transactions worldwide. In your testimony, you say that your primary focus is to facilitate cross-border remittance transactions for over 800 million people supported by funds by migrant workers. In Texas, an estimated 3.1 million immigrant workers comprise about 22% of our labor force. And in my district in particular, we are 77% Latino. So this is of great interest to me and to them. Many of these workers, however, face the same financial struggles, not only the financial struggles, but also access to the financial services industry, and it's multiplied by cultural and language barriers. So specifically, what is it that you think that this sector now will be able to do to be able to provide better access to wealth, better access to the financial services industry, considering the economic and language barriers that many migrants face?
Thank you so much for the question. This is another one of those areas that I love to talk about because I think it's actually...
Well, we have limited time.
There are a lot of important pieces here. The interoperability with the existing financial infrastructure means that individuals that don't actually have bank accounts, but something like a Moneygram relationship, which is in Texas, based in Texas, that we have on the Stellar Network, it allows these individuals that have cash, but they might not have a bank account. They can walk into Moneygram, convert their cash into a digital asset, and then send that asset to their family, to their friends, to anyone that they choose outside using the blockchain. And then then those individuals that they sent it to could send those digital assets to a Moneygram location outside the country in those regions that are participating, and they could then remove those assets from the blockchain. This is getting to the unbanked and the underbanked all over the world.
At the receiving end, how do they then convert the Moneygram, or whatever, I forget what you called it, into their
Local currency.
their local currency.
Right. Well, this is what's
And
awesome.
is there a fee involved there for the conversion, much
So-
like there is for traveler's checks?
So it's very important that on the network layer, the fees are very, very low. But we have pricing pressure created by the fact that these network fees are low. So there is
Want to
going
lower
to be
your
a fee when you
customer
have feet on the
acquisition
ground and you
costs?
have an ability
At
to make that transaction. So the end user who wants to go pick up their fiat at the local Moneygram, for
Want to
example,
lower your
they will
customer-
pay a fee. But there are no other intermediaries that are layered on top of that, and the fees are much lower than those that you see in the traditional financial infrastructure. So I feel like with this particular relationship and also just with this technology generally, what it opens up is a world for those users, as Mr. Brooks indicated earlier, where they get access to all of the ability to hold these assets, to be able to create value for themselves.
Well, I will follow up in writing with just how you're planning to reach with those communities, because I can imagine many remote villages, many remote rural areas, even in our great state of Texas, that you're not going to have access to this wherever you're supposed to pick up the money at the receiving end. So I have a lot of serious concerns about that, but I know that you've reached out to my office and we can talk. I want to now move on to, I'm glad that you all are sharing a lot of data and posting things on your webpage. From each one of you, will you commit to providing transparent information, not only on your employment numbers? I know that Ms. Adams asked about that, but also in terms of your leadership, your board of directors, and salaries and wages, because I know at least one of you has already had a New York Times review that was not very good. And I'm not going to pick on anybody. I just want a commitment from everyone on diversity and inclusion and transparency.
We
And just say yes or no, please.
We can commit to that.
Yes.
Yes.
As a public company, our data is available.
I'm sorry, I can't hear you, ma'am.
As a public company, our leadership and our board data is available.
I didn't hear from Mr. Casarella.
Yes.
Thank you. Thank you so much, and I've got 15 seconds. The other thing that I would like to see is, and I can follow up with it in writing, is demographic data on your users. How many are Latino, how many African American, how many, and also by income. Because I want to make sure that, again, that the users are diverse and that your leadership reflects that. Thank you.
Thank you. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to talk about ransomware. Obviously, we've seen an exponential increase in number of attacks in the last months and years, and it seems to only be getting worse. I know the crypto industry believes it can and currently does play a critical role in preventing illicit finance, including ransomware. Could you, maybe Ms. Haas or Mr. Bankman-Fried, could you describe for us how your firms take an active role, such as working with law enforcement and other market participants when these ransomware attacks occur? I just would like to get a better sense of the role centralized exchanges play with the flow of funds. For example, how do you keep track of tokens, transactions, and wallets? And maybe, including in your explanation, discuss the Colonial Pipeline attack and how the FBI was able to retrieve a substantial portion of the ransomware payments made. Whoever wants to go first.
I guess I'll jump in. Yeah, we work really actively on this. In addition to all of the standard procedures that we have around surveillance of deposits, of withdrawals, and of our customer information, we are responsive to law enforcement inquiries constantly. Around this, we are helpful whenever we can be, both in terms of information related to FTX and our users, but also, we can extend that out to blockchain histories. Because it is a public ledger, we can trace these assets through, and we can say, hey, you should go talk to this place next. This is where it seems like the assets probably ended up. We have assisted in, I think, somewhere north of $10 million of successful seizures so far, in cooperation with law enforcement related to this.
Quick follow-up. Why, if you can get a percentage back, why can't you get all of it back?
If you can get, sorry, percentage of the...
If, again, the Colonial Pipeline attack, 70, 80% of the ransom was retrieved. So what is the difference in the Bitcoin that was successfully retrieved as to the one,
Right.
the one that was not?
We can follow up with specifics on that case, but I'll say in general that any assets which are on our platform, we can retrieve. And often there is, you might see a case where some of the people involved would send assets in one direction, others would send it in another direction, and those others might not be in a trackable way. But anything that is on our platform, we can retrieve.
Sure, thank you. Maybe follow-up question, do you have any tools that we could help put in your toolbox, Congress, legislation that would facilitate greater recovery percentages?
So I think that speed is frankly one of the more important things here. I think like in any investigation, the faster that law enforcement can act on this, the greater the chances of recovery are. And so I think that we would love to just have standardized open lines with law enforcement where they know exactly how to reach out to us. We can have phone numbers available because, the faster that action can be taken, the greater the odds that the assets are, retrievable.
Sure, thank you. Mr. Allaire, one curious statistic regarding the cryptocurrency ecosystem I've noticed is its popularity with a younger and more diverse demographic. According to Pew Research, among African Americans, 18% have some level of experience with cryptocurrency, while among white Americans, the comparable figure in the survey was 13%, Hispanic, 21%, Asian, 23%. Additionally, 43% of men between the ages of 18 and 29 have invested in, traded, or used cryptocurrency. These numbers are incredibly divergent from what we see for traditional finance. Why do you believe that to be the case?
Thank you for the question, Congressman. I think what we see with crypto assets and digital assets more broadly is it's a form of finance that makes sense to young people. A lot of younger people have grown up with the internet. They were born with the internet in their crib, so to speak, and I think have an expectation of value being able to be used the same way that they can, share a JPEG photo or react to something. And so I think there's just a familiarity and an expectation that, of course, everything's going to be digital. And so I think the expectations are different. I think that a component of digital asset markets is this concept of democratizing access to financial markets, and digital asset markets do that. There is more democratized access. There are fewer barriers to entry for individuals, and I think that affects the adoption rates in minority communities. It affects the adoption rates more generally on some of those other demographics. So I think those are some of the key contributors.
Sure, thank you. Madam Chairwoman, I want to thank you for holding this hearing. It has been very productive, and I think this is a good example of how this committee should learn about important issues that are facing the American people, and we need to regulate carefully. Thank you, ma'am.
You're welcome, and thank you for your participation. The gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Thank you, Madam Chair. I appreciate the written and oral testimony from our expert witnesses. It's timely. The current regime of regulation by enforcement, in which entrepreneurs must negotiate with the SEC or the CFTC on a one-off basis, is not fair, it's not efficient, or conducive to US-based innovation. Congress needs to provide clarity and predictability by statute, and I'm ready to work with both my Democratic and my Republican colleagues to provide that. The rules of the road for Web3 can be a bipartisan initiative. The United States needs a primary crypto regulator that is tech and market structure neutral, and that has 3 imperatives. It compels disclosure and transparency, it prevents fraud and abuse, and it promotes the efficiency and the resilience of the market. And this primary regulator should work with a self-regulatory organization as a counterpart in the private sector to establish one light-touch rulebook for spot and derivatives listings, custody requirements, token issuance, asset servicing, cross-margining, settlement, know your customer and anti-money laundering, disclosure and auditing, and of course, stablecoin standards. Mr. Bankman-Fried, on that final point, stablecoin standards, which you've identified as perhaps the most important crypto innovation, in a recent interview on Invest Like the Best, you identified stablecoin regulation as a, quote, substantial step forward for persisting dollar dominance globally. And to quote you further, you said, there are going to be stablecoins in the world. And if you ban US dollar stablecoins, then it's going to be Euro coins or it's going to be Yuan stablecoins. And in your written testimony, you propose a 7-part framework for stablecoin regulation, and I want to thank you for the thoughtfulness behind that. Within this framework, can you identify the single most important thing that Congress could do right now to regulate stablecoins in order to persist dollar dominance?
Yeah, thank you for the questions. I think the single biggest thing is just ensure the reserves are what they say they are. That is the fundamental large portion of the risk that could be posed by them is from both a consumer protection and a systemic risk perspective is what if there is $1 trillion stablecoin with only $1 billion actually backing it? And so I think having daily attestations and periodic third-party audits to confirm that the stablecoins are backed one-to-one with regulatory oversight of that process is by far the single most important piece of that.
Does any of the other members of the panel disagree or want to expound on that statement? Mr. Allaire?
Yeah, I would jump in. I think what Sam has outlined is a really productive framework. I think clarity on this, on the disclosure and reporting requirements, and I think also on the reserve and liquidity requirements, and having that be a focused set of statutes could be extremely valuable to providing confidence to the market, providing confidence to market participants, and allow dollar digital currencies to flourish on the internet.
So if you say that this stablecoin is tethered to the value of the US dollar, you've got to disclose on a regular basis that you've got the liquidity and the reserves to match that, to reduce run risk, and you've got to be willing to be audited by a primary regulator.
Absolutely.
Mr. Bankman-Fried, you've said that you think that is the single most important regulatory step the United States could take to persist dollar dominance. And I don't want to put words in your mouth, but it struck me from the interview you had on Invest Like the Best that maybe the most important thing we could do, period, for crypto innovation. Does anybody on the panel want to expound on that or disagree with that statement?
I'll add some thoughts here. I completely agree that this is the most important thing that the U.S. can do. At the moment, it's not clear exactly how you can trust a dollar stablecoin, and that's unfortunate. Money is ultimately a product, and the way money is working today for people leaves a lot to be desired. Being able to put a dollar into a blockchain environment solves so many problems that we've been talking about all day today here. And I think that it's crucial for us to be able to set a clear regulatory plan in place that creates parity across all of these different products. And so I think it's really simple. If you have a primary regulator, you have clear reserves, you have made sure that you back them by cash equivalents, that creates a very much a level playing field for all different dollar-backed stablecoins. And then they'll really be stable.
I appreciate that. And this, to me, is an example of why these hearings, Madam Chairwoman, are so useful. And I feel like we really got a pretty clear path forward for one step that we could take, which is Congress should designate a regulator, at least initially the primary regulator, and task them with disclosure and auditing requirements for the stablecoin. I yield back, Madam Chair.
Thank you. The gentleman from Texas, Mr. Taylor, is now recognized for 5 minutes.
Thank you, Madam Chair. Appreciate this hearing. Ms. Dixon, question for you. As you know, my home state of Texas earlier this year created a more friendlier jurisdiction for crypto and blockchain in an effort to be a leader in that space. And I saw that Moneygram, which has many employees in my district, is headquartered right outside of my district. You've developed a partnership with them, and I was just wondering if you could go into further detail on what you're doing with Moneygram. And for those that don't know, Moneygram is one of the premier money transfer operations in the world. There are countries that literally 20% of their GDP is transferred in by Moneygram, so it's a pretty important product for a lot of the world. I was wondering you to talk about what you're doing with them.
Yeah, I think that's why it's such an important part. Thank you so much for the question. An important part of what it demonstrates not just the interoperability that blockchain has with the existing financial infrastructure, but it also demonstrates that you can actually offer services to traditionally unbanked or underbanked folks all over the world leveraging this kind of technology. And finally, I think importantly from the Moneygram standpoint and from remitter standpoint, it actually it provides instantaneous settlement. So they don't have IOUs out there, they actually have the money in their bank account when they're using the stable coins, which is very important for us to be able to get right. So the Moneygram relationship, which is in pilot right now in the United States, allows folks that you don't need to have a bank account to be able to get assets put on the blockchain. Right now, the hardest part about blockchain is the on and off ramp. We actually haven't done that exceptionally well because it's very, very hard to be able, unless you have a bank account, it's very, very hard to be able to get assets to get money into digital assets. The MoneyGram relationship could be one of many that actually demonstrates the ease of use that you can have. The beautiful thing about this is that MoneyGram, who acted very quickly in less than 2 months, was able to help to develop this technology, and this integration was stellar. But there's one part of it, but the other part of it is all you have to have is a wallet that's Stellar enabled. So a wallet anywhere in the world. It doesn't have to be a specific wallet. To be able to then walk into MoneyGram, get assets onto the blockchain using your fiat, your local fiat. It'll convert into USDC, which is Mr. Allaire's coin. And then you can have that in your wallet, you can generate yield on that, you can do lots of other things with respect to the assets that you have. You could then send them to family in a different country, for example, and once this is global, which will be next year, you could then go into participating MoneyGram locations and have those assets converted into your local currency, which is very important. So it works very well with the cash economy and cash ecosystems. And it demonstrates the true interoperability with blockchain and the traditional financial infrastructure, because that's what MoneyGram is and has done exceptionally well. And it demonstrates the value that these traditional players bring because they've created this really important ecosystem and network of folks all over the world that have feet on the ground that really work with cash, the individuals that have cash, to be able to deliver value to them, whether that be to be able to get it from family outside of their country or just to be able to convert these into digital assets. So it's a really exciting and transformational opportunity, in my opinion, for blockchain because of the speed of use and the ease at which you can get money on and off the blockchain.
And just to follow up with my earlier statement about Texas and its role, I mean, I think all of you have testified that you have different state regulatory licensure, right? I mean, everybody here's got state licenses and multiple state licenses, right? I mean, some of you have licenses in almost every state. And so on some level, you're seeing states, sometimes referred to as the laboratories of democracy, come up with their own policy sets. Ms. Dixon, do you think that that's working? Is that effective?
I think that we actually don't have to have those licenses because we're the infrastructure, but I will tell you, working with companies that have to have that, it's complicated for them to have the individualized different licensing structures all over, but I think that folks are doing it very well. Many of the individuals on this panel have been able to be successful at getting those licenses at the state level.
And one final comment, because it seems to me that there's sort of a drive to say you're unregulated. I was actually kind of surprised reading the memo from the committee staff saying this is an unregulated industry. Do any of you feel unregulated?
I think that's an important distinction, is that the activity itself is already regulated. And I think that when we focus on activity versus focus on the technology stack, you'll see that there's already a tremendous amount of regulation here and a lot of protections, and we should just be looking for those gaps instead of actually trying to create a new regulatory framework.
Yeah, and I think it's funny that when I asked, are you unregulated, everybody laughed. That literally the concept, I mean, almost the memo, unfortunately, is almost laughable, at least to the people that are regulated, the people that live it every day, to say, hey, you guys are a bunch of unregulated yahoos, do whatever you want. Like, that's not the world you live in. Madam Chair, I really appreciate the opportunity for this discussion. Thank you for having us here. I yield back.
You're so welcome. Thank you. I'd like to thank our witnesses for their testimony today. Without objection, all members have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. So without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And with that, this meeting is adjourned.